out the best kept tax deferral secrets. You think you know how to defer taxes. You have no idea. Today's guest is going to share with you some insight that the world has been hiding from you. But this gentleman, Brett Swarts, he is on a mission to let people know that there are some very attractive ways. Number one, for you to better serve your clients. Number two, to be very attractive to your upstream partnerships. Guys, today's episode is one that you are not going to want to miss. The big question is this: how do those of us in the real estate industry with crazy amounts of ambition, how do we think bigger than the building of our own empires? How do we simultaneously seek success and significance, income and impact? My name is Justin Stoddard, and this is the Think Bigger Real Estate Show. Again, welcome back to today's episode. I'm thrilled to announce and introduce you to my guest and my friend. His name is Brett Swarts. He's out of the Northern California market. He is a licensed commercial broker in California. He knows his stuff when it comes to real estate, and he's probably the world's foremost expert. In fact, right now he is co-authoring a book with Kevin Harrington, the original Shark, and is all over the place because he really has some unique knowledge that, again, is going to make you better for your clients, help you attract new and better high net worth clients, and also make you very different and very attractive to upstream partnerships who can send you a lot of business in a hurry. My friend, Brett, it's great to see you again.
Justin, so good to be here. Thanks for having me.
Yeah, my pleasure, man. Always enjoy your energy and just your expertise is bar none the best out there when it comes to this topic. So thrilled to be with you. Let's dive right in. Tell the folks at home how you uncovered these secrets. Like, tell us your story. How did you get here?
Yeah, I was just a real estate agent at the time, commercial agent at Marcus & Millichap, trying to help people buy and sell real estate in a 2006 world, which was actually a really great time to be a real estate agent. And then it went very south quickly in a 2008 crash. And I went from making a little bit of money to almost like nothing overnight. I don't know if you've ever been in a spot where you're afraid, not sure how you're going to provide for your family. That's where I was. I was going to survive in the business. If I was even going to make it out of this the transaction that's 100% commission, as you know, right? Situation where, especially in commercial real estate, was really tough. And so I found myself in my mentor's office, and I think it's a random Thursday, and this is somewhere around early 09. And I remember just sitting there going, "Oh my goodness! Like I don't know how I'm going to keep the lights on, kind of thing." And do I need to go get a real, get a real job, get the 9 to 5, right? I had a couple degrees and a minor. I'd studied in college, played basketball in college, had a lot of success. And then I was getting some momentum and everything just kind of hit a brick wall. And so I did what every good, I think, entrepreneur real estate wannabe does. You get a side hustle at a place to keep the lights on. My side hustle was Cheesecake Factory, where I worked nights and weekends. And then my brother, I moved in with my brother, my wife and I did, into his small condo with our first daughter, basically cut expenses to the absolute bare bottom. And during this challenging time financially, it was a great time to build grit, right? Build endurance, but also continue to learn. I continued to work at Marcus & Millichap, and I continued to learn from some of the best in the business. And I learned about something that was different than the 1031 exchange, because part of my challenge that I was going through, my clients were going through a similar one. They had too much toilets, trash liability, too much debt, not enough liquidity, and a lot of capital gains tax that had built up. And they're doing this thing called a 1031 exchange, which we all kind of know about as real estate professionals. Mm-hmm. And we found out that was the enemy, right? The enemy, because they found themselves in a situation where they were overpaying for properties, and now they lost half or everything. And so it became our mission to figure out, A, what went wrong, B, how do we separate ourselves from the competition in the future, and C, how do we solve this problem so they don't have to feel this pain. And so along that time, I learned about the Deferred Sales Trust, and I just started to study and practice it, and slowly, refer business to the attorneys, refer business to financial advisors, and it's really started to just, be a kind of a sponge to learn about it. And then fast forward, now all I do is speak and coach and teach people how to do this. And we close deals, weekly. I was able to retire from the Cheesecake Factory. My wife and I have 5 kids. She was able to stay home full time with our children, which was a huge value for us. And we absolutely love helping people get freedom and to be able to unlock what they want with their time and their energy and their wealth.
5 kids? Did I hear you right? What are you, crazy? I've got a big family as well. I love it, man.
Yeah, 5 kids is great, right? Yeah, 4 to 12 is the ages. 4 daughters and a baby boy. My wife does. She's the super mom, and it's been almost 14 years of marriage, and we stay. It is pretty crazy, right? I mean, you think you have 2, and you're like, we thought you always wanted 2, at least for us. Then you had 3, and you're like, okay, that's probably it. Then you have 4, and then it was like definitely it. And then like my wife said she wants to 5. So these kind of things. I always say one baby at a time, one day at a time, right? Don't press it too fast.
I love it. Yeah, we actually were crazy enough early on to say we wanted 6 up front, and we got to 6, and it was definitely we're done. So I commend the big family. I love it. I think it's beautiful. So you said something I think is really interesting that everybody needs to recognize here. You said 1031 exchange is the enemy, right? Because I want to expound upon that, because I think you bring up a really interesting point, is because some people don't actually want to trade property for property. They actually want to trade out, but the repercussions of doing so are so expensive, right? It's like, I guess I just have to go find another property. And like you said, there's a timeline where people end up buying stuff that they never would have bought before, simply because they have to. And what I hear you saying is that the DST provides an option for people to not have to go down that path, to maybe be able to trade out, right? Still have the same protections that you get from what would be a 1031 exchange, but you aren't maybe forced into kind of some of the same pigeonhole type scenarios that people get locked into. Would you say that that's one of the greatest benefits, or the biggest eye-opening for a lot of people, is that maybe there is another alternative here?
Yeah, the answer is yes, absolutely. All of that, and even more so than that. The 1031 exchange is kind of like blockbuster exit planning, right? And there's a thing called Netflix that came out. It was much more flexible. You didn't have to return it within 3 days. You had to drive in the snow. You didn't have to, didn't have to rewind the movie, or the DVD was scratched, right? In other words, it's not as flexible, especially if you're a residential luxury agent listening to this episode right now. A 1031 exchange doesn't work for a primary home. In fact, it only works for investment property. So we did a deal in Palo Alto, $8 million luxury home on University Avenue for one of the top realtors in the area for the last 20 years. And for his own house, he said, Brett, I always thought, by the way, it's funny fact, he had 6 kids too. His kids are all out of the house. He's in this huge house. He's like, Brett, I feel real estate rich, cash flow poor. I mean, in fact, a lot of my equity in my retirement is tied up in this property. But if I sell, I'm going to hit with huge tax. So I can't even sell unless I want to move out for 2 years and then try to do this 1031 thing, which is a whole nother, animal, because you have to not only replace equal or greater value, but to do equal or greater debt. And so he wasn't even able to sell. And that realtor, he hired someone to sell his own house for representation purposes. He's like, he wouldn't have got paid. I wouldn't have got out of my house. I wouldn't get location freedom. I wouldn't get cash flow freedom. I wouldn't get debt freedom. And so really the question is, you have to ask yourself, what are you trying to solve, right? Where are you at right now? What's your A? And B is where you're trying to go. And if A is, I want location freedom, I want cash flow freedom, I want debt freedom, I want what's called optimal timing freedom, where I can invest back into multiple assets at different times, dollar cost average, or even I can just wait on the sidelines and buy real estate at a discount. One of our sellers, clients, he sold a $2.6 million business in Alabama, deferred all the tax, and then he built 70 multifamily units in Tennessee with a portion of the money. So it can become your partner to partner with you on a deal. And so this is why it's like Netflix, right? It's super flexible. You can diversify. You can get out of debt. You can dollar cost average. You can go back in and out of real estate. You can be passive or active. You can put it all into the stock market and be completely passive. So it's just so much more flexible, and it fits what people are trying to achieve, which is freedom. Freedom from a number of things, but especially for a lot of people in California, as you know, that are relocating to Tennessees and the Floridas and the Texas. We just did a $17 million deal for a client in Sacramento, and he wants to move to Tennessee, right? And he has another big house that he's going to use part of the DST for as well. Now, one of the downsides is you do need to take some capital for a down payment. You can't just 1031 or deferred sales strategy to a primary home. So you got to make sure you follow certain rules and you pay some tax on that. But this way that we structure the deal. So really what we're getting at is having a tax flow and a cash flow mindset, not just cash flow. Most people just tell you it's all about cash flow. No. Guess what? Taxes are all-time high. They're going higher. The government has a spending problem, Justin, which means we all have a tax problem, right? Unless we're using what's legal, what's available, what strategy is going to help you unlock your freedom.
Yeah, boy, so well said. So many nuggets in there. I think if you didn't already prove the fact, just based on your previous accomplishments, that you are the foremost expert on this topic, I think you now have, and people likely would say, I need to talk to Brett if I have any more questions about this. So before I get too much further into the episode, Brett, let's just put it out there right now. How do people contact you?
Yeah, you can go to capitalgainstaxsolutions.com. We have a free ebook you can download right now. We also have our YouTube channel, Capital Gains Tax Solutions, where we go through a playlist, the Deferred Sales Trust versus the 1031 exchange, the Deferred Sales Trust versus the other DST, which is the Delaware Statutory Trust, which a lot of people get it confused with. We have client deal stories. We have walkthroughs. We have all of it on there. You can really kind of geek out for about an hour, and you'll have a lot of the information. That's Capital Gains Tax Solutions YouTube channel or capitalgainstaxsolutions.com.
I love it. Guys, this is super helpful. By the way, I just realized the connection that you have with Don Yoakum, who's quickly becoming one of my favorite people ever. Anyway, so Don, glad you're here, buddy. Great to see you. So what I want to talk about, Brett, because I believe that again, you've proven the fact that you are the foremost expert on this topic. So people know now how to get a hold of you. What I want to go into now is if I'm a residential real estate agent and I am now getting a glimpse of what this can do for me, I want you to teach us what would be the best approach if I've got a group of people in my database who are high net worth clients. What would you do leaving this episode to take that and begin to market yourself as somebody who can help them solve problems that other people aren't able to solve? What would be your recommendation there?
Well, the first thing is you got to make sure you're asking questions of the client to uncover needs and challenges, right? I mean, that's the first thing, and make sure that your agenda is not about getting a listing or getting business. Your agenda is 100% what their challenges are. By the way, our company is called Capital Gains Tax Solutions with an S, because sometimes it's not just the Deferred Sales Trust. Sometimes it is the 1031 exchange or Delaware Statutory Trust or donor advised fund or charitable remainder trust or opportunity zones, or cost segregation through buying multifamily investments. So there is solutions, plural. And so as a real estate professional myself who is still selling properties, winning listings, I'll give you the deal story that I just did for our client. In fact, they get called by some of the best top brokers, and we've had relationships all the time. And I said, why did you list with me? And they said, Brett, because you actually solved our problem. We were selling for them a $2.5 million, 15-unit multifamily property outside of Sacramento in Placerville. And they had done a 1031 exchange from a duplex in Manhattan Beach to this property about 10 years ago. Now, their NOI was about $120,000. And when they bought it was $1.2 million. Now the property has doubled in value. Their NOI went from, let's say, probably 90 to 120 over those years, right? But still, they're basically, their cash flow is about 4.5%, or the return on equity is about 4.5%. So we did an analysis which said, hey, what if we could increase your cash flow by 60%, which is the Deferred Sales Trust is going to be able to do? And really, what are you trying to do? And we dug into the situation that, hey, they had two twin daughters, okay? They had kids a little bit older in life, and they had built up their nest egg of about, $3, $4, $5, $6 million of wealth. And right now they didn't need any more millions. They needed time and energy. And part of what was happening is they're having to drive 4.5 hours to a property to deal with the city, to deal with rent control, to deal with COVID, deal with fires that are going on. All of these challenges that are taking away from the one thing they can never get back, which is time, especially time with their kids. So once we were able to, kind of connect the dots here and show them that the Deferred Sales Trust, and not only are they going to not have to trade 15 units for 30 units, right? Because most people go, well, I have 15 problems. I don't want to trade it for 30 problems. You're like, exactly, right? I'd rather not have all of that, time and energy, toilets, trash, and liability. So we really just focus on the client like a laser and what they're trying to solve for, uncover those needs. And part of how you do that is through what's called mirror and labeling, right? When someone says something, you're going to mirror what they said, and then you're going to label the emotion behind what they're saying. And as you do that, you're going to connect with somebody, and that's also going to help you to think creatively, right? Outside the box. Now, if 1031 exchange is an option, a Deferred Sales Trust is an option, and as you're mirroring, labeling, and working with people, as well as not having the meeting over the phone, number one. Number two, when you're in the first meeting, determining if a proposal is warranted to solve their problems, determining their motivations, their challenges, their needs, uncovering those things, right? Making sure that you're understanding where they're at. And then looking at a proposal as a potential option to sell, and look at what other options they have, and coming back with that as a solution to their problem. So that's kind of a big answer, but it's definitely an art and a science here. And if you have something that unlocks their challenge, guess what? They will list and sell with you. If you don't, they're going to either not sell at all, this is what they were doing for many years. They're like, I'm just not going to sell because I don't have a solution to the 1031 exchange. And until the Deferred Sales Trust showed up, then it was able to unlock what they needed, and we were able to solve the problem. So that's what I would say, Justin. Keep an open mind, but have the skill set and have the people to be able to call on, because we don't need more ideas or solutions. We actually just need more people. The people have all the ideas and solutions. And at first, you want to connect and partner with us, and then eventually you can be speaking these 1031 exchanges, these Deferred Sales Trusts, mostly on your own. And that's really the goal. So you can come in like this with a skill set that's going to unlock the challenges for your clients.
So let me stop there. If anybody that's listening with half a brain right now, right, meaning that you're focused on something else, maybe you've got your other screen open, you're working on stuff, and you're like, I liked what Brett said, but I did not give it my full attention. Just know that you can go to Brett's website and you can actually tap into a number of resources that will help you. Okay. If by chance you're focusing and you want us to go back and simplify what Brett just said there, because you can recognize really quickly that Brett knows a lot about this topic, right? So you have high net worth clients who have a property that they're not selling because they don't like the alternatives that they have, right? So think about the clients that you serve right now. There are clients in your database who potentially own properties who they aren't getting the joy out of them that they thought they were going to, but they don't know the alternative. It might be an interesting conversation to reach out to say, hey, I know you guys own multiple properties, and I just learned about, or I've taken a deeper dive education into some additional ways in which you can divest of that property without experiencing the same tax consequences of selling it, nor do you necessarily need to just trade into another property. So that might be a very kind of simple way to approach somebody and then leave it open at that point, right? And know that at any point, if you need to bring Brett into that conversation, that's what he does, right? So you can quickly make an introduction there so that he can explain it. But I would encourage you that there are opportunities, people who are struggling right now because they don't understand what Brett knows, that you can simply make that connection to Brett, help them to see the value in actually selling that property. I think there's big opportunities there. I also think that by going back and re-listening to this episode and going to Brett's website is you can take a couple examples. You're not going to take them as your own. We're going to say, I know of a couple, or I know of a gentleman who was in, and then restate the experience that Brett just shared right there. Take that to a financial advisor, take that to a CPA and say, are you aware of some of these other alternative ways in which people can sell their existing property and experience the benefits of deferred tax that are maybe not your typical traditional ways of doing so? And I think at that point, you will have become more attractive to those partners. They're going to recognize that you're better and that you're different than the average status quo agent. You're going to quickly stand out, which will not only give them another reason to have conversations with you, but it's going to give them another reason to want to refer you the business that they have. So great stuff, Brett. What else should people know about this before we wrap up? I know we have just a few more minutes left, but I'd love to hear any other insights that would really help people to understand, not know everything that you know about it, because you're obviously the authority and the expert here, but very tactical stuff that people can do today to take this information and go apply it to help them get more business and stand out in a crowded marketplace.
Yeah, the first thing, understand who it's for, right? So it's anyone who's selling $1 million asset worth at least $1 million net proceeds, $1 million gain, except if it's a primary home, you have what's called a 121 exclusion, which you get a little bit of tax break, actually substantial tax break, about 500,000 married, 250 single. So we need about a $2 million gain, right? And about a $1.5 million, net proceeds, then you qualify. So, but it also works for business owners. It works for cryptocurrency. We did a $5 million exit for a client who bought 50,000 worth of Bitcoin and went to 50 million. And what's so cool about that deal was A, we got her diversified, B, we got her out before the crash, but C, to use the capital to invest in a startup company with her college roommate, her dream, versus working for a big tech company. But that same money can go to real estate investments. So a lot of people don't realize that it's kind of like 1031 exchanging business or crypto or even stock. You can sell, you diversify, defer the tax, and then you can go buy real estate. So as a real estate professional, you have another buy side opportunity for a commission there, right? Most people want to be in real estate. They just don't know how to get there without getting hammered by tax. So if they have these other assets, and in fact, there's a big stat that according to the American Bankers Association, there's about 77 million baby boomers in the US alone. Every single day they're turning 65, 10,000 turning 65. And there's about $32 trillion of wealth. Justin, these are our parents, right? And they're passing the wealth down to us over the next 18 years. This is known as the largest wealth transfer in the history of the planet. Now, guess where the three top assets of all of the American wealth is tied to? High-end primary homes, businesses, private equity, and commercial real estate. So all of a sudden, if you have something that's going to help in this wealth transfer, to unlock capital, to defer tax, to go buy more real estate, would it make sense? You have a game-changing Netflix type of old blockbuster way of doing things, blockbuster, in the Deferred Sales Trust, and that's what provides the transformation. When you can unlock these freedoms and unlock the capital where people feel stuck and trapped, you want to come with creativity, with confidence, right, with clarity on what's possible, and when you do that, that unlocks, like Justin just said, you separate yourself from the competition. You're no longer just a real estate agent or a luxury agent. You are a luxury agent who helps people defer capital gains taxes, right? You're no longer just a commercial real estate agent, but you have something that can save a failing 1031 exchange. We are constantly saving 1031 exchanges, a backup plan or alternative. People call us and they're just blown away that this can happen and it works. And they go, wow, you saved my 1031 exchange. I would have paid hundreds of thousands to millions of tax. This is incredible. And that's the key. You want to make sure you know what it is, who it works for. The last thing I would just say is don't feel like you have to have all the answers, right? Like Justin said, you can lean on deals. Like we did another one in Sacramento for a client. His name's Steve. A 7-unit multifamily complex, sold the property, saved a 1031 exchange, separated the partnership. We did another one in San Diego for $13 million. It was this car wash. Another one in Georgia for 7.7. So once you understand, you see this one in San Francisco, a duplex for 1.25. Once you understand like all the deals that are actually closing right now, as real estate professionals, we want to see sales comps and actual deals. And those speak louder than anything else, right? So literally you can email me. I'll give you a copy of all of the financial advisors and also the groups that we're working with. And you can just here's the deals that are closing. I didn't close them, but talk with Brett. He did, right? And he can work with us to help us to exit this. And that's the point. Like you probably already do this with escrow agents and 1031 exchange companies. Make the handoff, and that can unlock the capital and the listing for you.
I'll share an experience that was shared with me by a financial advisor just a few weeks ago, Brett, that goes to show how oftentimes little people know and how helpful you can be. Because again, we position this is how you separate yourself. This is how you get more business. And that should appeal to everybody here. Yet this show is about not just creating successful businesses, but significant lives. And let me tell you a story about how you can do that. So a financial advisor, they inherited a client too late. And this client that the dad was getting ready to pass, he was so excited that he was able to pass 3 commercial properties to his family. Little did he know and really calculate the death tax, ended up selling 2 properties to pay for the taxes. And so the family only inherited 1, where that could have been prevented, right? And the financial advisors were just shaking their heads, being like, I wish we could have gotten there earlier because we could have done something about it. So there's in this process of transferring wealth from one generation to the next, which is one great avatar that you should be looking for when you're asking yourself to who would benefit from this.
Yeah. Let me add to that too, by the way, while you're talking about that. This is a great point, and it's perfect for what's called the DST 2.0. And so what Justin is referring to is the estate tax or the death tax. By the way, it has nothing to do with a stepped up basis. We've been taught blockbuster 1031, which is swap until you drop, which basically means you just keep trading properties. And then the kids get a stepped up basis when you drop dead, and then they can walk away capital gains tax free. And that is true. That is correct, as long as the laws stay that you can keep a stepped up basis. But what about the death tax, right? It has nothing to do with that. That's the elephant in the room. So let's imagine, Justin, you and your wife are worth $124 million, okay? And you're in your 90s, and you're coming to the end of your life, and all $124 million is tied to business, commercial real estate, illiquid assets, and you did no planning, right? And you were to die, your kids, as it stands today, they get about a $24 million exemption, but the other $100 million would be subject to 40% debt tax, which is $40 million. By the way, it's the same concept of Yellowstone. Yellowstone, the whole part of the whole show is, hey, we got this big ranch that's worth, I don't know, $200, $300, $400, $500 million is the valuation that they've had for 200 years, 150 years, whatever, right? And now they're looking at the people passing away and the estate being assessed, and then they're not going to be able to pay for it. They have to sell the farm, right? Sell the ranch. And so what could have done, and what you could do, say you're in your 90s, is you could sell it. You do need to sell it to a third-party buyer. You do need to sell it for fair market value, but you can move all of the proceeds into the Deferred Sales Trust Plus. And check this out. You eliminate the estate tax. So you no longer have that 40% or $40 million on that $124 million. So you got it outside your taxable estate. You solve the big elephant in the room. Okay. Now your kids can partner with the trust and go buy more real estate with an extra 40 million. Now in this scenario, 124 million, right? So if they would have known and if they would have sold, right? Now let's practice that in optimal timing, right? Imagine that they knew the good time to sell was in 2006 before the '08 crash, but they had no 1031 lined up and they have $150 million worth of real estate and they don't practice optimal timing, selling when they knew they should have sold because of the capital gains sector, because of the 1031. And now values drop and they have too much debt. Now all of a sudden they might be losing everything, right? Just for that standpoint alone. So there's so many angles here when you have flexibility and it actually solves the root cause of the problem. By the way, you have no life insurance when you do the DST Plus. You don't have to use it. You don't have to give it all away to charity, although you could give some to charity, right? And you don't have to have 50 kids and try to gift it all away. We do it one day, one transaction. This is also going to help this listing agent get the listing because we've solved the problem today. So that's one other thought you wanted to consider is the estate tax.
Yeah, I love it. So many solutions, Brett, and so many opportunities to help people. Again, if this show, Think Bigger Real Estate, is about helping you have success and significance, income and impact, Brett needs to be in your back pocket. He needs to be a guy that you know you have a relationship with and that you can bring him into conversations to really help people at a really big level while you build your business. Brett, I've got one more question for you before we wrap up, which is this. You are a big thinker. We know that about you. What is it that Brett Swarts does to continue to be a big thinker, to continue to expand and grow your possibilities? What does that look like?
Yeah, I mean, I think number one is making sure you're around people that are helping you to level up, like the Don Yoakum, right? Who's one of my like mentors and one of my business partners, right, with real estate. Like getting into books. I always say you get in the room with people that are smarter than you. Right? I got in the book with some smarter people, right? So like a Kevin Harrington from Shark Tank, and getting in the room with amazing commercial real estate syndicators and operators and financial advisors and people that are selling businesses and doing it on a high level where you can now glean from their wisdom, and you can provide referrals and network to people that are doing really well at what they're doing. So I think that's really key. I think also staying focused on working harder on myself than I do on my job. All right, my job and what I do to help people is a really big part of who I am, but really focusing on my health, my finances, my faith, my family, my fitness, right? Personal development and leadership. That helps me to grow my character, which ultimately helps me to do and be all that God created me to be. So those are probably the two main things to help me continue to think bigger and think well, I think.
I love it, Brett. A guy that I admire in all aspects of life. So such great answers, such great insight. Again, for those that are listening today, please go find Brett. His website is in the show notes. We'll also be putting out here shortly kind of a detailed ways in which you can really apply what Brett's talking about here today. So Brett, such a pleasure always. I look forward to staying connected. And thank you so much for coming on. And for everybody listening today, my final request is this: go think bigger. And Brett, thanks again for helping us do that, my friend.
Thanks a lot.
Be honest, hearing good ideas is not enough. You have to apply them in order to get the results desired. If you found value in today's episode, then you're really going to love the community of big thinkers and high achievers that we are building in order to help you to apply the principles taught today. If you're not yet a member of Think Bigger Real Estate on Facebook, go sign up now.